All right. So today is November 8th. It is Saturday. We've had a full week of trading. I'm coming back to these live market sessions, which are quite interesting. And I'm really just looking I'm going to take this time to try and bring myself back to the market and using these indicators, which I've been using for years, but looking at basically how I can up my game. So that is exactly what I'm going to be doing. This is more commentary, what I'm looking at, what I missed previously, what to look for in the future as far as for, I didn't catch this big move down. I could have caught quite a bit of this each day, but I missed out. So we're going to just kind of take this time to go back, look and see how this system works. So this is NASDAQ on the 15-minute time frame and on the 5-minute time frame. Dropping this back down to the 15-minute. Oh, hey, Victoria. I don't know about listening. You've been doing this as long as I have. Or longer, possibly. Very possibly. So if we break it down to more like a daily time frame, this is where we need to pay attention to how Asia reacts in the market. Previously, New York had sold off the session before. This was Thursday. Came back to the VWAP and then continued to Friday. So technically Friday, for us to catch the short, we would want to wait for Tokyo to open and let it set the range, basically. So the range being Tokyo and Hong Kong are both open at this point. And they sold it off pretty aggressively, making the low. Or making the high and the low of the session. And that session comes all the way to basically London. It ends just before London. So this is your Asian range. Oh, hey Marcus. Hey Standard. Marcus thought you were busy today. So there you have your Asian range. We basically had a double top on Friday on the 5-minute time frame. We really didn't have the push of volume in Tokyo and Hong Kong that I would be looking for as far as taking a reversal. So this would not be my entry. Like, to me, this didn't make sense to go short here, even based off of like the 50 EMA. So this is kind of just trash trading in my eyes. Victoria, eyes on the road. Don't crash. Oh my gosh. Oh, y'all are gonna make me scared. However, London was beautiful. This is, I wish I had been awake for this. You have the 200 EMA here. That's your 200 EMA. And then your 50 price had been trading above. It had left this beautiful little zone of imbalances, these blues vectors to come back to. And then we had kind of sideways price action, the end of Asia, waiting for London to open. Oh, you're in the back seat. Okay, then it's all good. Again, we have violets, greens. We have, obviously, you can just tell, like, there's volume right here in pre-London and into London open. Let's see if I can... It's the 1 minute, any clear? Oh, now I gotta go back and find it. Really? There it is. Not really any cleaner. Just have the EMAs and the failed uptrend. This is not the same day. What am I missing? Where is this one? Thursday at 8:35. I want this one. Where's it at? There it goes. Okay, I was like so confused there for a second. Feeling dumb. So on the 5, I mean, basically once it fails to get to the 200, there's only one way to go back, and that's going to be back to the 50. Coming back into the blue vectors. We have an M basically right here at the 50 EMA. Kind of basic. It's actually very similar to what they did in the New York session as well. For that big move down. As a continuation. So basically they failed the 50. So you have failure of the 50. And after that, you'd have to basically just trail it. I don't know if you would just probably trail it at the 50 EMA, as long as it stays below the 50 EMA. You could have rode this all the way down. I wouldn't have. I would get tricked out of this so easily. And then, again, look, we never come back to the 50. It's crazy. And then same thing. Right here on, let's see. Oh, I guess basically they failed to 50 here right before the drop in New York. So they made it kind of look like they were trying to bounce here, and then you basically just have a... Where they basically tried to... Couldn't get anywhere near the 50 EMA and continued selling off. So you could take this based on, if you took it on the based off of the break of the 50. Here they broke the 50. That's where I need to get better. Is studying this. Just basically failures of the 50 for short positions. And then you really had no reason to close. I mean, unless you're just scared of giving back too much. But either way, you could still get in. Failure of the 50, right? This one didn't even try to come back. This was your signal that it was failing already to continue down. Those two candles. Hey, Leo. Man, I don't know why I have such a hard time with shorts. They just don't like me. Or I don't like them. I'm always looking for longs. Okay, so a back to VWAP. There was no back to VWAP in the London session. It just flat sold off. And this is where watching the behavior of the VWAP, I've noticed when it does this is this yellow one, if you can see it. This yellow is basically London session VWAP, and they tagged it twice and just sold off completely. But when the VWAP goes down like this, they typically sell hard. Whereas then New York continued to sell off, failed to really get above the VWAP in the 50, sold off again. But notice how the VWAP kind of flattens out here, and it didn't continue to fall below the 50 EMA like it did here in London. That's kind of my idea of like, okay, where can I go long? Because I just want the chunk that comes back to the VWAP. There wasn't a real clean setup on the 5 minute, but at least you had this as your idea. You know, you go all this time, there's no vectors on the 5. So it's like, okay, let's just wait a little bit longer, and then you finally get this red vector at the lows. So you finally get the first bout of volume at the lows. And then they come down, they filled the wick. So as long as you gave yourself, you know, I guess a lot of people probably got stopped out, honestly. And that's unless you targeted the 700. So they didn't quite pick up the 700s, but they got close. I'm just interested in this move right here. Across 20 accounts. Max contract size, just kidding. Keep trying to see if the 15 minute is any cleaner for me, but I can't get an entry on the 15 very often. It gives too much wiggle room, basically. This might not have been bad. I think that if I remember right, there was a violet vector stopping volume at the bottom of this 15-minute candle. So let's go back to Thursday. So Thursday, look, see how New York just sold and the price came down? It finally started to flatten out, but it definitely was not as flat as, like, this one I felt like was not nearly as, like, coming down. Let's see. So for another back to VWAP, I'm waiting for price to deviate away. This actually wasn't a bad one. This would have been relatively clean as long as you get out at the VWAP. And you look at this one on the on the 1 minute. Actually, let's just do that. Let's go find this on the 1 minute. Oh, yeah. That was clean. Okay. So this one, you know, we don't know it's going to sell off again, right? But you had this red vector sitting right here, like a sore thumb, showing that price was, you know, pushing down. And this whole thing was red, but this is the 5. I'm just making sure that's the 5. Then you have another violet vector here. So basically you have imbalances to come back to. This would have been kind of hard to catch on the 1 minute. I bet you anything it's a lot cleaner on the 15 second. What price is this? Okay, so 461, 450. Let me see. Oh, wait, I can do this thing. This is a fun part. Let's see if I do interval, crosshair, interval. No. Time? Maybe it's time. Let's try time. If I click here. Yeah, so much better. Sorry. That took way too long for me to figure that out. So clean on the 15-second. Nope, that's not it. That's a different one. Right? No, that is it. I didn't have the box on this one. Okay. So you had this one to come back to. Say you didn't say, I mean, this was your first clue to go long. Come back. Give me this. Please. There. You have a big push in volume on the 15-second green vector. There we go. And then we failed the 50. So say, I mean, you could actually just scalp this back to the 50, back towards the 50 and gotten out on the 15-second. And then as you have red vectors pushing down again, this red-blue on the 15-second shows you something's changing. So there's actually a second entry. And then you have the 1-minute blue stopping volume candle, which is your trigger to go back long. How far was it? I don't know how far it is. Let's look and see. We'll just say we got in on the blue, about there. And taking it back to VWAP. Like, you don't need that much risk. Your risk would be just a little bit below the wick to let it move. So calculator wise, get back over here. There we go. This is 32. I don't know how to read this close P&L blah 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 stuff. I think it's 442 ticks. I think that might be wrong though. Okay, let's see. So 433 back to VWAP at 543. So yeah, it's 100 points basically. So 400 ticks. Okay, so yeah, that's 100 points. 400 ticks. Let's see, calculator, because I'm just woke up from a nap. So 400 ticks at one contract. That's a $2,000 move on one contract. Put that on 20 accounts. Oh yeah, that'd be wonderful. Make yourself 40,000 in one little scalp. Yep, so this one, no, it moved over here. This one comes back to, let's say 400 ticks. $2,000 move. Back to VWAP. Oh yeah. So that's my favorite thing to do, is these back to VWAPs. I mean, it was clean. There was nothing to do. And then there was nothing here to scare you out of this move either. It was so friendly, even on the 15 seconds, just like, oh, we're just gonna go straight back. The hardest part on that is walking away. Being like, I want more. Because if you want more, you would have been left high and dry, not noticing the rejection of the VWAP. In fact, I think I was in this trade and I did not close it at the VWAP, and I gave back probably 100 ticks. So, not ideal. We'll leave that there. Let's go back and find another one. Let's find another, just on a 5 minute. Okay, this is all-time highs. It's hard to trade all-time highs. Okay, so here's your continuation. I can't do continuations. I'm not looking for that. I'm looking just for back to VWAP. Which, I mean, I don't think I would have shorted this. Yes, Leo, exactly. So the goal is to mitigate risk, basically. So if you have one funded account and say even if it's $1 million or even your own personal money, you're going to be risking more capital, having to put on more size and put on more risk in that one account. Whereas if it's in multiple accounts, you can use, basically you can take more risk because you're spanning it out more. And then who wants to trade with their own money anyway? I don't. Let me do this. Let me turn off this time for a second. So think of it this way. If you can get, so Take Profit Trader allows you to have 5 funded accounts. Okay. So you get 5 accounts. It doesn't really matter if you want to do what size the accounts are, because most of the entries that I'm taking are very low risk. We're mitigating risk on them. So we're taking, these are low R trades, risk to reward trades. So say you do 5 accounts, you take the same trade in each of those 5 accounts, right? So say you do the 100Ks and you pass them. So you have to do what, 6,000, I believe. You have to earn 6,000 to pass them. So anyway, so you pass the accounts with 6,000. Now you have your brand new account. You have to make 6,000 on that one before you can do your daily payouts, but you can take payouts every day. So if you have 5 accounts and you're taking, the same trade that I just showed you across 5 accounts, that's basically, that was one contract for 400 ticks. That's 2,000, right? Then you can do that times 5. So you're basically making $10,000 in a day. And you're not having to risk your own money, and you're not having to risk, over leveraging your account, basically. Like one contract on a $100,000 account. Even a $50,000 account, it's a little bit tighter, but we're not looking at taking $1,000 losses. We're looking at taking $250 losses if a trade doesn't work out. But that's where the prop firms come in, and in finding ones that you can work with. So Apex Trader does 20 accounts. I don't really care for Apex because I want to be able to get my money within like a reasonable time period, and I don't want somebody judging how I trade, basically. So the ones that I do like, so I really like Take Profit Trader. What was the other one? And then I also use Top Step. And they're really good. The other thing with these prop firms, okay, is a $50,000 account can be like about $100 with Take Profit Trader. And so you're only risking $100 to learn how to do this business, basically. And they give you a test, you have to pass it and stuff. You have to really look into it. But for learning, it's a lot better than throwing your own money at it. Yeah, but Top Step is good. I guess if you're already with Top Step, you understand how it works then. The only difference is that Take Profit Trader, they don't have a consistency rule. You can take daily payouts. You don't have to rush for the daily payouts, but I know a lot of people that, say they make, they have a $50,000 account. They're already above the buffer. They'll go through and they'll take one trade for the day and say it's, say they took that $2,000 trade. So they're then going to take that $2,000 straight out of their account. They just take it out. It's as simple as that. You do it on 5 accounts, it's $10,000. And then you just rinse and repeat. You just look for one good setup, take it back, work it over and over. Now, can you get paid every day? Well, it depends if you stay profitable every single day. So that's the only catch with it. They tell you can take a payout every day, but your account has to be within, above the buffer, and you can only take out however much is above the buffer. Unless you tell them that you want to close your account, and then you can take everything out of it. But my 2 favorites is Take Profit Trader and Top Step. There's another one I've heard of, like Alpha Futures, that's been coming up, and Tradeify. Tradeify is another good one. Try to think of what else is there. Like Tradeify is getting a lot of interest right now because they're doing their Grand Cup thing, but I believe you can also have 5 accounts with Tradeify. So really, you could give yourself 15 accounts pretty decently. The Take Profit Traders, that's 5 accounts that you could use for daily payouts. I think Tradeify is going to be, I know they have like so many days that you have to trade, and then same with Top Step. But those would be the 3 probably. And Apex is like super cheap, but I just don't know if I don't know how I feel about opening up 20 accounts and then having to pass 20 accounts with them. I think it's the thought of having 20 accounts with them that is the best part. It's the best way I could think of it. Okay. Same for you, Victoria. I don't know if you stepped out and started doing that stuff either. I think you had talked about it at one point, looking at prop firms. So say you couldn't read this bounce right here on the 5-minute. On New York Open is always so crazy. It's like, how do you know how far it's really going to go? We had plenty to come back to here. Actually, that was a really good level. I should have seen this, but I don't remember if I traded this or not. I felt like I scalped this on the way up. Pretty sure I did. I think I scalped this on the way up this day. I like to go long, so. But yeah, this where it had bounced from the previous day, that actually would have been a beautiful take profit. You wouldn't be able to aim for the exact high, because the exact high is like right there. Let's see how we could utilize this. So this was a good one. It was at the very end of the day. It would have been harder to catch this one because it was at the end of the day. You have your 5 and 13. You did get your 5 and 13 crossing over. If you look, we had the crossover right here. Your 5 and 13 are just your essential moving averages. That yellow one's hard to see on the screen, but I can highlight it. Anyway, you had your crossover officially here. I bet if we look at this on the 15 second. Oh, we were close. I was already really close to this. Nice. Okay, so this one, let's bring it back over. Okay, so you basically had, this is a 15-second. Look, here you would have had a W. If say you wanted to ride another pump, look at this nice clean W off the 200 on the 15-second. You had red vector, came back up, came down, and then you immediately have green vectors pushing price up back to the 50. And then we had a... Basically, they were... You could tell that they were fighting the top of this range. They just kept bouncing. That's too funny. It's just... When you put it on the 15 seconds, sometimes it's so clean. Look. There was a W. Right off the 200. This one... You know, here was this other W off the 200. Is there another one? This one would have been really hard to catch. But look, check this out. Blue stopping volume candle. With a green. I mean, that right there was like, oh, reversal time. So crazy that you can actually use the hybrid theory on every time frame. And look at these bounces, like almost straight off the 50. Back to the 50 bounce. Little V play. Would have been better if there was a vector there, but there wasn't. And then here, 50 EMA. Another bounce. This one was a little bit more choppy. But look, another bounce off the 200. That's so sick. So sick. I love it. Anyway, I get excited about longs. You would just grab this one time. You could ride this up. First red push, second red push, third red push. A little bit more down below the 50. I mean the 200 with a reversal back up. And then as long as you held onto it here and you just rode it for the 200, I mean, you could take it. When's next time? It still didn't touch it here. Right here. So say you get out when it failed. No, it still didn't fail the 200 though. It would be another bounce off the 200. You didn't fail till here. Okay, hold on. I want to see this. We can look at this and see. This was when we failed. Where's this at? Let me see. Sync globally. Okay, so right there. To where did we pick this up? Never broke the 200. Right here. So off of this V right here. Sync it globally. Where is it at? Ugh, what a sick move. I love this. Okay. I'm just trying to be like realistic for someone, you know, who hasn't been staring at NASDAQ quite as long. This would be really neat because you have a clear change, like just basing it off. Say you're already in an uptrend, you just want a continuation move, coming back to the... Again, this is, I think Marcus uses this a lot. The 5 and 13, right when they squeeze and then they expand away again. So I like it better on the 15 second because I prefer to be able to see the manipulation on the 15 second. But still, so we're grabbing it on the basis of we're going to push higher. We're going to just ride this until it comes back to the... Come back to there. That's what I was looking for it to do. Coming back to and we don't need this kind of stop. Your stop would just be the bottom of that candle. So this is what I'm saying, like to be able to find these moves and really trust them, you have to we're using type stops. I'm not interested in 1% of my portfolio. I don't want any of my portfolio to go away, or any of my hard-earned cash to be given back. So let's see. Writing it from here to here is we'll just say 750 to 840. 750 to 840. Let's see how much that is actually. So 750 to 840. So that's a 90 tick move. I mean, a 90 point move. So we have 90 times 4 ticks, or yeah, 4 ticks in each point. That's 360 ticks. At one contract is worth $5 for a contract. So that's an $1,800 move. And that was coming in basically at lunchtime. Just for a continuation. And really, if you wanted, you could get out on a green vector pushing higher. But I like the fact that how this failed, the 200. I feel like this was safer to say, okay, you know, I'm gonna get out. Like I don't want it to come back to the 800, so I'm just gonna get out at the 200. Yeah, I like this one. And what? You'd have to sit there for a while. I don't know. Say you come into the markets late. That'd be nice. So this one was 360 ticks. One contract. It's $5, so you're looking at, it's an $1,800 move. And that's within a strategy. That's like not going with your gut feeling. That's not going with, you know, I don't know how to get in. I'm just going to get in and we'll let it do whatever it happens. You have a 15-second time frame. You have a clear direction. Your EMAs, look at this. You have a clear direction. Your EMAs are all fanned out to the upside. You just need a little piece of it. You don't need a big chunk of it. You just need a place to get in. So we got in at the 200 EMA and basically rode it until it got out. We rode it until she failed 200. Another almost $2,000 move. Get rid of these little V's. The only thing is that you can't get scared on these pullbacks. You know, you have to understand what they're doing. You have to understand that when price is pushing away, it has to come back and pick up orders just to push away again. Like that's how it works. See, this one here was more tricky because price was below the 50 and the 200 and everything. It wasn't quite... This wasn't as clean. This is like an advanced setup, basically. This was them failing to get back to the VWAP. But for just a continuation, this is great. This is how you enter a pullback. Okay, let's get away from a New York open. Let's find another one. What is this? Asia? Yeah, that's the Asian session. Okay. I want to be where the volume is. New York, 5-minute time frame. This one, you basically you had an M formation. That's what this was. And then you just go short. But notice it never comes back to VWAP. It really didn't go anywhere this day though. It kind of just chugged sideways. We didn't have enough direction. I'm not even gonna look at shorts on that right now. I feel like my move didn't come. These are the days I probably wouldn't do very good because it never comes back. That was kind of a weird day. Right, stop hunt low. Actually, I could see myself taking the long. Where's this one at? You put the time back on. Let me see if I can get. There we go. Oh yeah, 15-second. This was clean. And I can already tell you I probably took the long here. Turn the clicker back off. Let's see, coming off, we were we're already at the London session VWAP when New York opened. So then New York sold off. Yeah, we were at the 50, it failed to 50. Red vector below the 50. That's what this is. You had a double bottom here that you could have gotten in on below. Or there was a, say you missed it. It came back down to pick up some more orders. This was basically a larger W. A W within a W. So there was that W. Reds and greens. Notice they're all in the same area. It's funny. This was your W. Red vector. And then they wanted to come back and take back this red vector. That green vector through the 50 tells you that they're going to push for a continuation. Say you didn't get in on the W, you could actually just wait for these EMAs to expand. Notice everything was kind of flat here. Your 200 on the 15-second, your 200, your 50, everything was kind of jumbled. So you could actually wait for them to pick a direction. Now you have your 200 EMA, your 50 EMA, and then your 5 and 13. The red and the yellow expanding. Notice they're all expanding away in an upwards, you know, what do they say? 1 o'clock position. Once they go 1 o'clock, they are gone. But you had this was a good entry right here. Notice it comes back to the 50. And then you get this little like doji candle on the 15-second. That would be your entry for a long, assuming that it's going to hold. And with that, like your stop would be the 200. We'll just say that we got in there. Your stop would be this 200. Or, well, basically you'd give it the VWAP. Low risk. And then we didn't really have targets upside. Let me see. Oh yeah, we did. Look. And then coming back, we had these red vector imbalances from London here. Not really more than that, though. Try to make these a little bit bigger. There we go. So you had these imbalances. So we're going to take this back to, we'll just say this first red vector. So 873. Eight, 7, 873. Okay. And that gives you a green vector on the 15-second. To close into momentum. It's better to close into momentum than it is to, you know, wait for price to come back on you, just because your orders get triggered better. So as everybody's buying and they're shooting price up, you want to sell into that because it gives you the volume to sell into. So say one day down the road you have 1,000 contracts on NASDAQ. I know, funny. Then you can just automatically be closing into volume because you want them all to get triggered where everybody else is still triggered to buy. But yeah, so we'll just say, so for this move here, where was that long? Right there. It's basically at the 50. 8, 7, 3, so 1, 2, 3. There we go. But we had a really tight stop. Okay. So this one was how many ticks? I'm just curious. 45 to 74. So 745 to 873. I think it's actually what I'd said, 873. That's 128 ticks. I mean, 128 points times 4 ticks puts you at 512 ticks. This was a big payday. This is, you take the money and you go to a coffee shop and go chill. So you have 512 ticks. $5 for one contract. That's $25.60. Yeah. So there you're risking very minimal. $200. This one might have been, I don't know, what, 300 max, something like that. To be able to pick that up. And again, that's continuation bounces. We have expansion away. We had a possible, you could say it's a possible W, not confirmed. Looks like a W to me. Yes, you have a W. Price comes back, bounces off the 50, continuation upside. Look, it never even comes back. You could actually take this all the way back until it comes back to the 50, which then it's 856, but sorry, my kid came in. She needed to ask me where the ham was. Okay. So that's our one for the day. Let's see if another day if we can find one. And see, this would have eaten me up. If I was trying to like, this would smack the crud out of me. I'm gonna be honest. Me as a trader, these are the moves I look for. This, I gotta stay away from trying to do this move down here. So yeah, I think if I make $2,500 across like 5 accounts, 20 accounts would be great, but like 5, 10, 15, I think I'm done for the day. I think that's what I need to get to. I've had a couple of days where I've done like 10,000 in one move on gold, and it kind of jacks with my head a little bit psychologically. And then I think I have to try and do $10,000 moves every single day. And I think I just need to take those as like, those were days I got lucky that I didn't get stopped out. Simple as that. So this is what I really need. I just need a single move I can pick up, put them across all my accounts, and be good for the day. Okay, let's find another one. Like, this is also a nice double bottom. I'm sure that there was a lot of people thinking that we were going to go up higher, and then they just didn't. New York. This was a sell-off at the high. This one was, okay, so this was neat. So you had, this was the gap. Okay, so Asia sent price straight up, consolidated, sent it up again in London. And this is a clear manipulation. Like, this was where you could really see the M formation. You have a lot of volume pushing price up. All of these are imbalances, right? So you have imbalances here, imbalances here, imbalances here. And then you've got the story of the wick. So the wicks, you've got a long wick. Usually when they print on the like on the 5-minute, 15-minute, when you get a big wick like this, they're going to work back into that wick. And New York barely took it above. Your entry for a short could be here. Just because this is one of the few times I would be like, we're taking this short. And then look how close it was to the previous day high. I mean, right here. Like, we kept failing this spot too. I could have taken the short. Okay, let's look at this on the 15-second. Wrong button. I'm gonna do this by time. That way it all picks up. And let's do... What? What just happened? Really? The 15-second only goes back so far. That makes me want to cry. Oh, I don't have the 15-second. Well, guess what? I guess we're stopping. That's so sad. I can't go back that far. Oh, wait. I just messed it up. No, come back. Come back. I can't believe it won't let me go further back. This one. Let me change this to the 1 minute. I know I can go back on the 1 minute. I can at least go look at it, right? Okay. I want this one. Nope, that's not it. This one. This is what we want to look at. That's the 5 minute. Okay, let's see if we can find it on the 1 minute. Let me turn this off. Turning off time again. Okay, we'll do this one last one. So we had an entry based off of stopping volume candle. So nobody wants to buy up here. As soon as this thing flips, basically on that's on New York open. I don't know if I would take this early. Boy, it sure does look clean here though. We'll do it just for shits and giggles. So here we're going to take the short, right? And we're looking for, here's a previous point of consolidation. Right here. Right? So we're going to try, well, I guess we can, there's no reason for us to close it. So much easier to say that on the 5 minute than it is on the 1. I think this might scare me out. No, because they like to come back for the blues. So they pinned the 50, but they continued price back down. Basically made a little M formation and continued down further. Yep, this is the first W. Like this is the first W structure. This would have gotten me out of the trade. So let's see. That comes to, yep, right here. Okay. So we'll just ride this back to the W. And then we got out because it was a green vector too. So let's just see where this puts us. We have, so 233 to 18. So 233. It's 215 points. And then we do multiply that by 4 because there's 4 ticks per point. Point is $1, ticks is 25 cents. So that's 860 ticks on one contract. $5 per tick, that's $4,300. Yeah. Yeah, that's why I need to learn how to short. See how fast that was? What you got in, you're paying attention to it. Let's say you start watching, yeah, 8:30, so that's 7:30 my time. So 8:30 until 10:30, 2 hours. 2 freaking hours. That's all we had to do. And then we leave the charts and go do something else. Man, that's so pretty. This is an obvious move. I wish I had this on the 15-second, but right here. Again, pushing price up on the 1 minute, consolidating. They didn't come back down to the 50, so you're expecting them to push again. I don't know why I just clicked. There we go. Oops. And then you get another push, violet vector, this little stopping volume one right here. Right here is violet. One more reach, grab as many orders as they can, and then they shift. First violet vector. If you get used to looking at this behavior right here, you can actually start taking shorts just based on the failed upside of this, really. I mean, they were telling you, hey, watch out. This was so clean. And then I just gotta stop. I gotta keep holding on to these. I gotta give myself a reason to get out of the trade. Now, mind you, I probably could have just been like, you know what, $2,000, I'm done. And just walked away. Okay. Well, guess what? That's enough backtesting for now. Otherwise, I'm going to lose it. I can't believe I cannot go any further back on the 15-second. That's so sad. So sad. Anyway, well, thanks for hanging out with me. I wanted to record this so that way anybody who wants to go back and look at the behavior on the 15-second, the 1 minute, the 5 minute, they can kind of see what I look for. I really like, if you need just one strategy to use all the time, I really like, this is harder to me, but I'm a huge fan of these back to VWAPs like this. Or like, well, this one was a continuation. Now there was a back to VWAP here. All these red vectors, notice where they come back to, the VWAP. But this was really late in the day, so I find this one hard to stay with. You'd have to sit there all day long waiting for it. But this one was back to VWAP. This was a good one. Just wait for them to manipulate away. You get these, long red vectors. You see the vectors coming into play. And then you just take your little piece and you're good. We don't need a huge move to make good money in this game. But the way that we ended Friday, you like seeing how other people chart. I like to think that the market's going to come back, but you can't marry the trade that way, right? So you're just looking at taking a piece of it. You don't need the whole piece; you just need a piece of it. I know it's probably a little harder to do something like that with options, but this is just for trading futures contracts. This is the easiest way that I can find to scalp. So I'm going to do another session of this tomorrow. I think I'm going to come back and try to do gold tomorrow and see anybody that likes trading gold. Kind of take a look at that and give my perspective of how you find your entries to get in on those as well. It's not as good for New York, so it'd be for people that like to trade Asia. So I will do that tomorrow. For now, I'm going to go make myself some dinner because it is 5:45 and my room has gone completely dark because it's dark outside. But y'all have a good night. Don't spend too much time on the charts.